Hello and welcome to your own channel. Let's talk business once again. As always, I'm excited to have you here. This episode is in continuation of the last episode where we were discussing the size and the composition of London insurance and reinsurance market according to the London Matters 2020 report. In this short video presentation, we will see and talk about first, the London market's main source of premium and premium distribution across the geography. Second, the growing share of US excess and surplus line of premium and its contribution to London market. Third, we will also see the Delegate Authority business contribution to the London market premium. And finally, we will talk about the London market's combined ratio and the profitability. So as always, there is a lot to know and a lot to discuss. So without waiting more, let's start talking business. For those who are new to my channel, I am Ravi Shankar. I am having more than 16 years of experience in business analysis, largely associated with P&C and general insurance domain, currently practicing in Lloyd's of London. If you have any queries specific to this video presentation or my previous video presentation, do reach me at my Hotmail and LinkedIn profile. I am also available in Twitter, so you can reach me over there. Once again, thanks a lot for all your emails, all your suggestions, all your valuable feedbacks, and I really love them all. They are very close to my heart. So let's move ahead. For those who are watching this video presentation first time, this is the second video presentation in the series. In this series, we are discussing about LMG's London Matters Report 2020. In the previous video presentation, we talked about the London Matters first report 2017. And currently talking about 2020. I already talked about the central idea behind publishing this report and the history behind this report. So please check it out, the first video presentation in this series. Well, the agenda of this series is mentioned here. So we will be talking about end-to-end everything about the report. This is the second part where we are talking about the size and the composition of the market. In this presentation, we are studying how the market is growing, which sectors are changing, and where the premium is coming from. In addition to that, as I mentioned in my previous video presentation, I am planning to cover the London market contribution to the UK and global economy. In this presentation, I am planning to cover how the London market plays a fundamental role in supporting and stimulating the global economic growth through the risk transfer and advisory. Secondly, I'm also planning to cover the global capital base and the players in the London market. And in this, we will talk about the capital that underpins the London market underwriting, looking at where in the world it is coming from, why people invest in the market, and the form in which the capital is provided. We will also analyze the profile of the carriers writing business into the London market and how it has evolved over the period of time. We will talk about the various group initiatives like modernization, business environment, talent, and diversity. And then finally, we will talk about the other aspect of the report. So let's move ahead and let's start talking about the business. So let's talk about the London market premium share across the geography. It is an interesting slide and in my views a real eye-opener. In 2018, the US and Canada overtook the UK and Ireland as a main source of premium. The P&C segment in US and Canada is the main source of London market premium. The London market income from the North America, which include US and Canada, increased by 6% between 2010 and 2018, making it the largest source of premium for the first time during the lifetime of London market. So if you can see over here, the premium is growing in US and Canada. The North America is also fastest growing region for the London market, and the growth has been largely by a strong performance in US excess and surplus sector. According to the Fitch, the direct written premium in US has gone for 8 consecutive years. So what is excess and surplus insurance? So I pull out this cutting from the Nationwide website. It says that, simply put, excess and surplus line or ENS is a specialty market that insures things standard carriers won't cover. The difficult or high risk exposure in which the ENS carriers specialize may range from mobile home or daycare center to multinational company and anything which is coming in between. Whereas if you observe carefully, the income share from the UK and Ireland saw a sharp decline between 2010 and 2018, dropping by 5%. This region fall behind North America for the first time. If you can see over here, right, the share of UK and Ireland is declining sharply by 5% from 2010 to 2018. So you might be thinking why the share of UK and Ireland is declining. The main reason is UK insurer is moving their business from London to regional offices, and there's a reason behind it. They wanted to lower down their transactional costs, as well as they wanted to stay closer to the client so that they can understand the client requirement better. So this is the main reasons, right, where the UK Ireland premium is experiencing a sharp decline. On the other hand, the emerging market like Asia, Africa are still underperforming. So if you can see over here, the Asia is slightly steadily, and then Africa is also at the same level, whereas there is a marginal growth on the Australasia side, and in the Europe it is almost like stagnant as compared to the data between 2010 and 2018. So we have to understand why Asia and Africa are still underperforming, and there are reasons for the slower growth. Say for example, the growth in many of these markets is still being driven by the mainstream commercial insurance business, such as local package business and commercial auto, which is less specialized and can be covered by the local retail market. That is one reason. And secondly, the insurance buyer prefer to buy locally, and doing so has become more feasible as the local carrier increases the capacity and capabilities. As a result, much of the business isn't coming to the London. On the positive side, the emerging market are seeking coverage from more complex risks. This should provide the London market the opportunity to capture these sectors and increase their premium profile within these sectors. So you must be thinking, okay, fine, US and Canada is a main source of London market income, but what is driving the growth and how it is compared with the other regions? You will get the answer to these questions, but before that, let's catch up some of the highlights from this slide. North America replaces the UK and Ireland as the biggest source of income. That is one thing. Income from North America is increased by 6% between 2010 to 2018. In 2018, US and Canada overtook the UK and Ireland as a main source of income, which we already discussed. Moving ahead, let's talk about the driving force behind the North American business. The London market also grew its market share in the US E&S sector, which has seen the increasing amount of business migrating from the retail to the wholesale. So before getting deep into that, right, to understand how the E&S is driving the growth, we have to understand some of the basic. So in the previous presentation, we talked about the London market premium is 76 billion US dollars. The 52 billion is coming from the commercial insurance, whereas 24 billion is coming. So if you combine 52 plus 24, it is coming 76 billion US dollars when it comes to the London market total premium. Now from this 52 billion, right, 37.9 billion is coming from the P&C, right? The remaining 24.2 billion US dollar in terms of gross written premium is coming from reinsurance. If you see from the reason wise, the US and Canada is contributing 27.1 billion gross written premium. UK and Ireland is 23.9 billion gross written premium in terms of US dollars. Europe is 10.5, 5.7 is Asia, and 8.7 is other. As we discussed earlier, the largest contribution overall comes from the North American P&C segment, which is at 17.1 billion. And the UK and Ireland remain the main source of premium for the specialty line and the reinsurance we can see over here. So let's move ahead and see what is driving the US excess and the surplus line. So the P&C is driving the growth in the North America. As we know, the London market also grew its market share in the US excess and surplus line sector, which has seen the increasing amount of business migrating from retail to wholesale, as we discussed earlier. The vast majority of this business is placed through Lloyd's of London, and it's coming from the small to medium size E&S broker. On the underwriting side, there is a significant overlap among the E&S, which is excess and surplus underwriter, with many having the presence in both London and US. The dual platform approach enables them to see a business that flow to the London, allowing them to become more flexible and offer more choice to their clients, especially in class where the London market has a specific expertise, such as cyber and catastrophe exposed risk. Merger and acquisition activities are also driving the development of E&S market. For example, in 2018, where the AIG acquired the Validus Holding and Hartford Financial Services Group purchases the Navigator Group. Since 2018, in the order to improve the performance, the leading E&S market participant, including the Lloyd's and the AIG, has increased their focus on the underwriting discipline. They have done this by various means, including changing the policy limit, reducing the risk appetite, and driving out profitable business. Moving ahead, for the first time, London Matters examined the Delegate Authority business within the London market and identified that Delegate Authority business is growing but reducing its share in terms of the London market premium. The Delegate Authority make a substantial and important contribution, accounting for more than 27% of London market premium in 2018. While Delegate Authority's contribution has grown in absolute terms, its share from the London market premium has fallen 3.5% since 2016. So if you can see over here, in 2016, its contribution was around 30.9%, whereas in 2018, it has gone down by 3.5% and making it to 27.4%. The DA business is valuable part of the London market in that it not only provide the way for underwriters and broker to try out the new product and new classes of business, but also it provide access to the local market and the local customer. So in 2015, recognizing that the London market need to be more efficient in how it handle the DA business, London initiated a program called LMTOM to improve the process with the objective to ensure that it continues to be an attractive market for the cover holders and the local customers. The DA is also key focus within the Future at Lloyd's program, modernization program, and as you know, the Lloyd's has already bought 40% stake in PPL just to make sure that the business which is flowing in from rest of the world to the London market is seamless and easy to access. A milestone in the DA program was reached in September 2018 when the Delegate Authority Submission, Access and Transformation Service was rolled out. This market-wide platform provides a central service that standardizes the collection, validation, processing and supply of Delegate Authority data across the market. It changes the way the bordereau is shared and processed in the London market by delivering the standardized bordereau data to all market participants, thereby transforming and modernizing cover holders management and strengthening its key global distribution channel. So if you want to understand more about the Delegate Authority and DA set, please refer to this video presentation. I have covered DA business and DA sets in detail over here. Let's move ahead and talk about the profitability in terms of combined ratio and London market comparison with its peers. The peer benchmark includes 12 Bermuda and US global specialty companies for whom the majority of specialty business is transacted outside the London. This suggests that the London wholesale market has outperformed its peer over the last decade despite of higher combined ratio of the recent year. If you can see over here, this orange line is Lloyd's. This blue line is an external specialty benchmark. One of the important factors is the London Matter report is using the Lloyd's as a proxy for London market wholesale reinsurance when it comes to the combined ratio. So if you can see over here, we are talking about the Lloyd's combined ratio largely, and this was all below 100%, which was quite okay till 2017 despite the fact that there was a Thai flood and New Zealand earthquake. Whereas from 2014, you can see a spike in the combined ratio in the Lloyd's, where when in 2017, when US experienced the Harvey, Irma, and Maria, this was almost like 150, which is very costly. Finally, in 2016, it is lowering down and it is now reached to 100%, where the market has registered some growth. Well, that's all from today's video presentation, and I hope you have gained some knowledge from the today's sessions. Thanks for your valuable time. Goodbye and take very good care of yourself. Bye, and I'll see you soon in the next video presentation in this series.